Welcome back. Well, some bit of a recovery is what we've seen from the lows of the day. So we're off 50 points from the day's low, which is pretty good news. But one stock that's moved to the high point of the day as we speak is NMDC. And that one, in fact, has done pretty well in trade. Remember, just yesterday we told you news that NMDC has gone ahead and cut prices for the first time since August. Now, today, the key reason the stock is moving up is because Kotak, they've come out with a note and they've upgraded the stock to buy with a target price of around 130 rupees. They take into a consideration that, yes, there was a price cut that was announced yesterday, but that's an attempt to revive volumes for the second half of the year. Both the domestic as well as seaborne iron ore prices, they believe, has bottomed out, and things will look up for the next 6 to around 12 months. They also add that there's a strong case for NMDC to re-rate from here, post that demerger of the steel plant, because that one was draining a lot of cash. So, now capital allocation will be improved, the free cash flow generation will be even better. And finally, they state that if the company is going to make a lot more money, then there's a strong case for them to give out higher dividend yield as well. So put these factors together, Kotak is positive on NMDC. Prakash, that's what Kotak has to say. I reached out to a couple of steel players and they indicated that the iron ore offtake isn't that great. For me, that's a little bit worrying, but let's see how things pan out. Maybe it's a one-off, or maybe there's one large producer who is not functioning at optimum levels. But how would you view this stock, NMDC at around 110 rupees? The last quarter's numbers were very, very disappointing.
So, Nigel, I would be surprised if it probably needs more time to come back to a run rate which is fairly impressive and which can justify a decent uptick in the stock price at least. Because on the ground, you are very right. Not only iron ore demand, but also if you see on the other side, the secondary steel demand itself is really not very impressive. In fact, the prices have been softening post Diwali, and this is, mind you, a quarter where things actually look up in terms of construction activity and all. The only hope, is my sense, is towards early next year, calendar 23, you'll probably see a lot of infrastructure pushed by the government getting geared up for the election year of 2024. And that build-up is something which could probably come to the rescue of steel producers. And if secondary steel prices improve, then you have the primary prices and of course the iron ore uptick also coming through. So till then, it's probably going to be in the value zone. But you know what? I think if the environment is still not very optimistically, they say favorable, I don't see any reason why you would want to buy into a stock when it very clearly can give you a 10, 15, 20% downside also, and that makes your risk reward even better at those zones. So wait for that. Is my view. Of course, it could differ. People like the business from a longer term perspective, but the entry point is important according to me, and that would be some time away from where it is today.
Nykaa is up close to about 5% in trade. Early in the morning, remember, there was a big block deal in which TPG sold more than 5 crore shares, totally valued at more than 1,000 crore rupees. So despite the selling pressure, Nykaa has inched up. One, the deal took place at a price of 184.5, so at a very marginal discount to where the stock was had closed yesterday. Secondly, the sale by TPG today, coupled with the 1.1 crore shares that it sold on 11th of November, perhaps means it's a clean-out trade by TPG. They do not have more shares, which could hit the market. And thirdly, in a block deal which took place yesterday, Canadian Pension Plan Investment also bought 1.7 crore shares. So some marquee investors are exiting post the lock-in, but many of them are entering in as well. So Nykaa has inched to the high point of the day, up close to about 5% odd. Prakash, I wanted to get your thoughts in on the aviation sector. There is talk about how Air India the Tatas are looking to merge all the 4 airlines that they own into one. And the big one is going to be Vistara as well as Air India. Does it mean anything from a listed stock market point of view, the Interglobe Aviations and SpiceJet, this merging of brands?
So, Nima, that's an interesting space given the kind of tectonic shifts that are happening. And I can tell you, if you fly Air Asia or a Vistara, you will see a very clear, and of course Air India, you'll see a very clear demonstration of change that's happening very rapidly, especially a common thread like the Tata New Pass being almost like an equivalent of a frequent flyer program for some of these airlines which didn't have all that. So, there's this whole underlying effort to unify a lot of the operational parts, which components of the business, which make it very synergistic and hence efficient and hence profitable. So that's going to happen, but that's work in progress. the immediate impact for all of this when a stronger player like Air India plus Vistara plus AirAsia comes out is that a weaker player like Spice will have to be nudged out. My worry is that you'll have Spice struggling and you'll have a go first, which probably will be now go last from that perspective, though it's not listed. But I think it's difficult for it to get listed anymore. And the beneficiary could probably be Indigo. So interesting space, you can take your pick. But my money would, at the moment, be on Indigo for some more time till it comes back into the reckoning with leadership on market share and profitability as we see in the next couple of months, especially given the fact that the festive season is going up very well for them on pricing. So interesting times, but the Tata, conglomerate of airlines would probably take some time to get ready to battle out. Till then, you'll probably see Indigo benefit in the short term.
Okay, all right. Prakash, thank you very much. Great speaking with you. Appreciate you joining in with all of that perspective. Have a good weekend and hope to see you back soon next week. Thank you. Anand Shah is head of PMS and AIF investments at ICICI Pru Asset Management Company. He's joining us now to take some questions. Anand, good to have you with us here. Thank you very much. Since you have a